So people are freaking out over the idea of a 50-year mortgage. Now, I don't want you to be freaking out, so I'm going to give you 3 reasons not to freak out over the next 3 minutes. But if you followed my YouTube channel, you'd already understand how real estate works and you'd understand how money works, so you wouldn't be freaking out. Okay, rule number 1 that good real estate investors understand is they don't pick fights with the weatherman, right? Like everybody right now is upset because they want more affordable housing. But that's not what the forecast says, right? The forecast says it's wintertime, it's getting colder, you need to put on a jacket, right? And people want the weather to be warmer, so they're fighting the weatherman, right? And essentially, we don't have the technology to make the weather warmer. Same thing in the real estate market, right? The forecast is that the dollar is going down in value and real estate is going up in value. And you need to use the correct financial products to insulate your budget from the chilling effects of inflation. That's the truth. No one wants to hear it, but it is the truth. Okay. Second thing is, rich people, they don't pay off mortgages in 30 years. They pay it off in 7 to 15 years, and you could do the same thing with a 50-year loan. Okay. So second point, really easy. Third thing, this one is going to blow your mind. And that is that if you couldn't negotiate against the bank, you'd have to negotiate against the seller. And it would look a little something like this. Well, Mr. Seller, I would like to buy your house for $300,000, but I don't have $300,000. And he says, kick rocks because, I only want $300,000. And you say, well, but I can make payments. And he says, no, because money in the future is worth less than money today. And you say, but I'll pay you more money. I'll pay you $1 million. And he goes, but on what terms? And you go, well, the perfect terms for me would be 0% interest, and I'll give you $1 a year for 1 million years, right? And the reason why deal number 2 is better for the buyer, because it uses 2 principles. And these principles are like Newton's laws of physics, like they are truths. These 2 truths are lower interest rates, always better for the borrower than it is for the bank. Always. That's the truth. Longer terms are always better for the borrower than they are for the bank. I'm going to explain why real quickly. Because essentially you're paying the bank back with money that's not worth as much as what you borrowed it. What that means is right now, $2,000 pays for like a family of 4. I could feed my family for at least 3 or 4 months, right? But in the future, $2,000 is going to buy like 2 or 3 days worth of food in 50 years. So understanding that principle is that in 50 years, my mortgage is going to feel cheap in 50 years compared to today. So if you want to win with money, follow my channel and I'll help you so that way you're not freaking out about money.